Pru came out with their numbers with profits jumping twofold. You had the value of new businesses as well, which saw a 31% jump on the year-on-year basis. Let's connect with Mr. N.S. Kannan, Managing Director and CEO of the company. Thanks so much for taking time out. To begin with, let's have you talk us through what exactly led to this kind of a solid jump in your net profit as well as a healthy VNB growth.
If I just look at the quarter just as gone by, which was the last quarter of the financial year, we had a loss of momentum as an industry, also true for us, in the month of January and then again in the month of February as well, because of the third wave of COVID. Good development was that the mortality development was not bad at all. So that was not an issue. However, there was frequent business disruption caused by employees getting sick, distribution partners getting sick. And there was a start on and off kind of an approach we have had through the quarter. But the good news is that March we could pull back, and you would see from our results that we have had the best ever monthly APE in 21 years of our existence in the month of March. So little bit of a slow start, start-stop kind of an approach, and they ended extremely well the March as well as the quarter for us. So as a result, we have seen a 20% growth in APE for the year as a whole. And we have seen, you talked about VNB, we have seen a 33% growth in the value of new business, leading to a 28% VNB margin. So that has been the highlight of the year. And we do believe that we are on track for the aspiration which we had articulated in the past of doubling our value of new business of financial year 2019 in 4 years. That is by this financial year. So we believe that we are on track for that. That is the highlight of the quarter. You asked about the profit emergence during the quarter. As you know, life insurance industry, the way the accounting works, the cost cannot be amortized. So the more you do a business, the higher the strain is. So that is what one will have to keep in mind. So we continue to believe that the value of new business is a more accurate representation of the profit emergence in life insurance industry. Having said that, we have seen PAT to pick up quite smartly from the March of last year, the previous year, to the March of financial year 2022. That has been largely because of the COVID impact we have had in the March of the previous year. So that has been the highlight of this year just gone by and the quarter just gone by.
Mr. Kannan, can you walk us through details on the protection business that stands at about 17% currently? What is the outlook as the company is focusing on expanding the overall product mix?
On protection, as we have said before, it's one of the huge underpenetrated opportunities in the country. So because of that, for life insurance companies like us, it's a multi-decade growth opportunity. So having said that, during the period of the pandemic, we have had challenges, not in terms of demand, but in terms of fulfillment of the demand in especially the retail protection line of business, because we could not get the customers go to the medical centers to do medical examinations before issuance of the policy, nor we could send technicians to get the medical test done at home. So last year and a half too have been quite difficult for this business in terms of fulfillment. Also, in a live pandemic environment, one has to be careful in writing 40, 50-year protection business. So the underwriting standards have become tighter. The reinsurers on their part also just wanted to make sure that we write good business. So a host of factors, but net, what has happened is that while the demand for protection continues to be great in the country, the fulfillment challenges have been there. So to that extent, the retail protection, we have seen a year-on-year decline. And in between, as you know, there has been pricing changes as well, led by reinsurers' price hike. While we have been very calibrated in terms of the price increases, nevertheless, because of the fulfillment issues, we have had our own challenges. So the retail protection was a year-on-year decline. Having said that, there are some other parts of the business in protection, which are like group term business, the credit life business. Those businesses we've been able to take advantage of because large corporates in the country have been very focused on increasing the term cover for their own employees, as well as this constituents are very good in terms of the mortality risk because large corporates have ensured that the vaccination is very high amongst their employees. And also, they were not too worried about the price because the fundamental issue during the period was making sure that the employees of these corporates got term insurance. So we took advantage of that, situation, and we made sure that we covered large corporates and ensured that our group term business grew, even as slowly the retail protection business is coming back.
So, Mr. Kannan, total claims settled due to COVID-19, it stands at about 2,100 crore. What is the status now? Give us an insight into the overall claims, any changes at the consumer trend in the current situation?
Yeah, on the claim side, you're right. We had a total of 2,100 crore claim during the financial year arising out of COVID. However, this is the gross claim. So if you look at net of reinsurance, it's a little over 1,000 crores. So that is the net claim we had to account for, not only pay and also account for in our books. So that is the number we have had. You asked about the COVID claim trends. Yes, in the second wave, we had a tough time, as you would have seen in the first quarter of the financial year just went by. We actually incurred a loss because of the settled COVID claims, in-process COVID claims, as well as the future provisions we had made. But subsequently, we in the third quarter and fourth quarter, the claim intensity had come down quite sharply. And particularly in the fourth quarter, when we look at the mortality development arising out of the third wave, the claims were not really meaningful. They're very, very little. So at this point in time, we do believe that the mortality issue arising out of COVID claims is just behind us. This 2,100 crores we talked about, which is a net claim of about 1,000 crores, we had processed over 14,000 claims during this last financial year. However, the claim intensity as we speak in terms of run rate has come down so sharply that we believe that just about a 25 crores of provision for deaths already incurred but not reported, that is adequate going forward. So we do believe at this point in time, looking at the data, the mortality issues arising out of COVID is firmly behind us. That's the outlook I have for the claims.
Persistency ratio has shown an improvement. It is growing at a rate of about 9%. How do you see the enterprise value growing in next 2 years?
Of course, a good persistency will contribute to the increase in EV. First on persistency, if I look at last year, as you rightly said, across the cohorts, we have seen improvement. And the most immediate cohort of 13-month persistency, we have actually seen a 90 basis points improvement. I think it reflects one quality of say, but also from a consumer perspective, they want the insurance cover to continue by paying premiums. I think these are the two trends which are reflected in our numbers of persistency. So that is a good part of the story. And I think going forward, we do believe that we have more leeway in terms of improvement of persistency from here on. You talked about a 9% growth in EV, that's correct. But within the component of EV, if you really look at the value of in-force business, it's actually grown at 19%. You talked about the outlook for EV. I believe that this last year's EV growth of 9% has got impaired by the mortality variance, which we have put out in our results numbers, which broadly mirrors the COVID claims of 1,000 crore we talked about. So that had to be taken out from the EV, and that is why the growth of EV got a bit suppressed. Otherwise, in normal course, if you see, the current year VNB contributes about 7% plus for the EV growth, and another 7% is contributed by the unwind of the past VNB, last year's VNB getting unwound, truing up to current present value. So those two things themselves constitute 14 to 15% growth in EV. But this particular year which went by has to be looked at in the context of 1,000 crores of COVID claims, which impacted the EV. So otherwise, outlooks wise, we do believe that if you adjust for COVID claims this year, that is the way it should continue going forward.
Mr. Kannan, good morning. Just want to speak with you about the life insurance sector at large. The LIC mega IPO, can that turn out to be a disruptor? What can it do for the market dynamics and the sector at large?
So I will take the LIC IPO first. We do believe that it's a very positive development for the industry. That's our view, because we have one of our blue chip large companies getting listed. It will attract a lot of foreign flows into the country. LIC has got outstanding business. And this is a liberalization where the incumbent LIC has gone from strength to strength, even post liberalization. So the public sector company has thrived, private sector has thrived. That's a big success story of insurance liberalization. So I think that there'll be more money coming in, more analysts will cover this, more investors will cover this industry, and the general profile of the industry, and in terms of the constituent of the industry in the market cap of the listed stocks, that will really go up. So these are the positive developments, and I do believe that it's very good development for all the companies like us. The other development is also, I want to talk about the regulation here, and we have a very facilitative kind of regulation. The regulators are extremely focused. We have had, as you know, we have had the appointment of chairman of IRDA very recently. He has met with the industry proactively, spent a lot of time with the life insurance industry. The focus seems to be to increase the penetration, to ensure that over a period of time, every single Indian has life insurance and every Indian family has got health insurance. So I think these are the positive developments. The chairman IRDA has also articulated publicly about his preference for principle-based regulation as opposed to rule-based regulation. That view positively. And also he has talked a lot about leveraging technology, data, and the ecosystem for the benefit of the citizens of the country. And he has also talked about ease of doing business. These are positive developments. So given all this, I do believe that the outlook for the industry is extremely positive going forward.
Okay, Mr. Kannan, we're going to leave it at that. It's always a pleasure talking to you. Thank you so much for joining us live today on the market. That's ICICI Pru Life Insurance for you, ladies and gentlemen. The stock is up by about 3.5% in trade at the moment.